Hi, I'm Todd Rosenbluth, Head of Research at VettaFi, and thanks for joining us for our latest episode of ETF360. I'm excited to be joined by Chad Miller, and we're talking about TSME, which is the Thrivent Asset Management ETF. Chad, thanks for joining me.
Thanks for having me, Todd. It's great to be here.
It's my pleasure. So we're talking about small and mid-cap investing. Why do you think investors should be focusing on that space now?
Yeah, thanks, Todd. That's a great place to start. So, small and mid-cap companies are a really great place to invest. And in fact, if we look back over the past 30 years, small and mid-cap equities have the highest annualized return of any publicly traded asset class in the US. And this is due to a number of different reasons, but a few of those would be they typically have a higher growth rate relative to the market overall. They benefit from M&A activity, typically being the takeout of mergers and acquisitions. They have a stronger shareholder base due to higher insider ownership and lower turnover in the marketplace. And they have a longer runway for growth and improvement. And so, in recognizing this opportunity, Thrivent has made a concerted effort to invest in the small and mid cap space with a number of different actively managed funds to support our clients' investment needs.
So you mentioned the active management component to this. Why is active management important in the small cap space?
Yeah, so starting with the great backdrop and attractive area that we're investing in, we layer onto that our active investment approach. And there's really three key tenets of our advantage. First is the great team we've built up. Second is our process. And third is our long-term focus. So if we look at the team, we have approximately 35 investment professionals that are developing unique insights. They're meeting with companies, they're going out to trade shows, and they're using their experience and their knowledge base to come up with unique and proprietary insights. We supplement this with our common process across the platform where we're all focused on operating performance, valuation, and sentiment of the companies as a starting point. And then we have a long-term investment time horizon. So we're looking out beyond what a lot of investors do. It's not the next week or quarter, but we're trying to look out in the next 3 to 5 years to use that as a differentiating factor in our investments.
So one thing that also makes the fund unique to me in the small cap space is there's an ESG focus. Tell us why that's important.
Yeah, so we start with our fundamental process, and to that, we integrate in our ESG approach and analysis. And we're doing this because we think that there are unique and useful insights in this ESG information. Our ESG process is focused around three key categories. First of all, being stakeholder value and analysis. So we're looking for those companies that can sustainably and successfully serve their primary stakeholders. We break it down and look at how a company is performing as it relates to the environment or their employees or the communities that they do business in. And we think that gives us a more holistic understanding of how the company is operating and what the risks and opportunities might be. The second is we focus on financial materiality as it relates to ESG. So we're really trying to key in on what we believe are the top 3 to 5 or so ESG topics that a company needs to address to be successful over the long term. And lastly is engagement with the company. As long-term investors, we're lucky enough to be able to engage and discuss with the companies as shareholders. And so we're able to dive into the details of all these individual categories and figure out what a company is doing to address its challenges both today and into the future to see how they will be positioned. And on this fund, we don't have any sector exclusions because we believe in bottom-up research and really creating a case-by-case analysis for each individual circumstance leads to the best investment decisions, both from a fundamental perspective and an ESG perspective. And as we go through this process, we're really using this to help us identify risks and opportunities. And on the risk side, I think that a lot of companies that face a challenge or an issue that arises, a lot of time that issue traces back to a topic within the E, S, or the G. And so having a framework to be able to go through each of these categories and consider how a company is performing hopefully allows us to reduce risk in the portfolio. And on the opposite side of this is the opportunities. And with a lot of changes that are happening in the economy overall, as we think about an energy transition, as we think about a shift to circular business practices, other social challenges, if there are companies that have solutions to these challenges, supplemented with strong corporate governance, that can be a great investment opportunity for shareholders as well.
So now you got me excited to find out some examples of some of the companies that fit the cut.
Yeah, great. So a couple examples that we like here. The first being Quanta Services, which is a engineering and construction company that provides their services to the utility sector. And what Quanta realized several years ago was that there would be a huge labor shortage in trying to construct the grid, both for maintenance today and also the shift to renewable energy sources as we look out 3 to 5 years and beyond. And so what they went out and did is they acquired the largest trade skill university in the U.S. and they've invested in that to expand the workforce for themselves as well as the industry to provide the skills necessary to grow and expand. And what that has really done for them is it's allowed them to be the employer of choice in the industry where they're very focused on training, development, and opportunities for advancement, and also leading safety standards, where the performance of the executive team is actually linked to the safety performance that the company executes on. So it's a really great story of a company that saw the challenges ahead, invested in their workforce and the communities they do business in, and is one that we like in the portfolio. Another example is Burlington Stores, which is an off-price retailer. And what they do is they repurpose excess goods that would have otherwise wound up in a landfill, and they deliver them to their customers at the lowest possible price. So they have a real high concerted effort and focus around driving the best value to their customers to deliver this value proposition, both for their customers as well as the communities they do business in. And they've been investing heavily in their buyer group, which is the group that goes out and sources the best goods and value to their end customers, focused a lot on providing them the resources they need to execute, training and development, the diversity, equity, inclusion of this group to make it a high-performing team. And they've recently taken steps to set emission reduction targets, audit their supplier group, and as well as creating a nonprofit foundation to give back to the communities they do business in.
Thanks, Chad. So I know you're one of the three portfolio managers on the strategy. How does the team work together?
Yeah, that's a great question. Thank you. So we have three portfolio managers on the team that work together in a collaborative fashion. Myself, along with Matt Finn, who's a fantastic resource. He has extensive experience across market caps and industries and cycles. And so he really provides that perspective across a lot of different areas that helps us running the fund. The other member of our portfolio management team is Simon Bizian, and he recently came over to Thrivent. Prior to that, he was focused on running a European focus fund, and so that's brought us a global perspective as well as a lens into some of the ESG topics and considerations that have led off in Europe and are now coming into more focus here in the US market. And beyond the direct portfolio managers, we have 6 other actively managed equity funds in the small and mid cap space, all with their dedicated portfolio management teams. So as we're looking at a company that may land under their style box or they are considering one that we're investing in, we can tap into their experience and expertise in that individual category. And what that allows us to do is for every security that we're analyzing, we have at least 2 sets of eyes on that analysis. And that allows us to go back and forth and do a bull versus bear debate and hopefully come to the best investment conclusion at the end of the day.
Thanks, Chad, for the insights, and thank you everybody for joining us for ETF 360. We'll see you next time.
Thanks for having me.